Welcome in this video. Zbcn coin is increasing. Where can it stop? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we look at the chart from a broader perspective, we can see that the price has been moving in a steady upward trend for some time. This rising trend line indicates that buying pressure in the market remains strong and that the price continues to stay within a generally positive structure. Especially in long-term analyses, such uptrends provide important clues that investor confidence is intact and that prices are consistently reacting from higher lows. However, even though this upward trend line appears to be holding, in technical analysis, a healthy uptrend often includes occasional pullbacks to the trend line, followed by renewed upward movement. This is because prices never rise in a straight or one-directional line. On the contrary, even within upward trends, there are frequent corrections and retracements. These pullbacks help flush out weak hands and provide opportunities for new buyers to enter the market. Therefore, even though that price is currently trading above the rising trend line, any potential touch of this line should not cause panic. In fact, such touches are valuable for testing whether the trend remains valid. If the price pulls back to this trend line and finds strong buying support, it confirms that the uptrend is still progressing on a healthy foundation. This not only verifies the trend from a technical standpoint, but also helps reinforce investor confidence. Additionally, such trend lines should be viewed not only as support levels, but also as reference points. Especially after short-term corrections, reactions from this area may indicate the start of a new upward wave. In this context, it is actually healthier for the chart if the price occasionally approaches or touches the trend line, rather than constantly moving away from it with continuous upward movement. In conclusion, the current uptrend structure is clearly intact for now. However, for this trend to sustain, it is expected that the price may occasionally approach this level and find support. These kinds of technical developments play a critical role not only for short-term movements, but also for understanding the strength of the trend in the bigger picture. But it's not enough to only look at trend lines. We also need to examine other metrics. Stay tuned. From a technical standpoint, the current price action aligns closely with the Fibonacci retracement levels, an analytical tool widely used in technical analysis and proven reliable by investors over time. This tool is particularly useful in identifying potential recovery levels after a significant downward move. With the 0,618 and 0,786 retracement levels offering especially valuable insights based on how price reacts around them. In the current scenario, we can see that after the recent pullback, the price has entered a recovery phase and has now reached the 0,786 level, according to Fibonacci measurements. This level is often considered a last line of defense in technical terms. If the price breaks through this level, it is typically interpreted not as a mere retracement, but as the potential beginning of a new upward trend. This zone acts as a battleground between buyers and sellers. Historically, there have been numerous instances of selling pressure emerging from this region, but the fact that price is now testing this resistance suggests that buyers may be stronger this time, increasing the likelihood of an upward breakout. The price behavior at this Fibonacci level also reflects investor psychology. While many traders view this area as a profit-taking zone, others see it as an opportunity to jump on the train. If the buyer side wins out and the price starts closing above this region, upward momentum is likely to increase significantly. This would signal not only a short-term rally, but also a potentially lasting shift in trend direction. It's also noteworthy that the price is currently consolidating at this level. Such behavior is typical around significant resistance zones, where we often see either a sharp reaction or a period of indecision. If the price compresses around this area for a few candles and then breaks out with high volume, it's highly likely that it will move aggressively to fill previous gaps at higher levels. Potential targets include prior swing highs or psychological resistance levels. That said, investors should also remain aware of the possibility of a reversal. Important levels like this come with a high risk of rejection. If the price fails to break through and faces renewed downward pressure, the 0,618 level would be the first key support to watch. This zone could serve as a strong buy opportunity or offer clues about whether a new low might be forming. Finally, it's important to note that Fibonacci retracement is just a tool. However, interpreting it correctly and evaluating it alongside market psychology can provide a much more strategic and well-rounded perspective. The fact that the price is currently hovering around the 0,786 level clearly indicates that market participants are at a decision point and that a major move may be imminent. If a breakout occurs from here, it would represent not only a technical confirmation, but also a significant boost in investor confidence. Therefore, how the price behaves at this level will largely shape the direction of the market in the days ahead. From a broader perspective, one of the most technically significant signals emerging on the chart is the behavior of the ATR, Average True Range Indicator. This tool is one of the most critical instruments used to measure price volatility, or the degree of market fluctuation. In recent periods, it is clearly observable that the ATR value has begun to gain a slight upward momentum. While this development may not seem dramatic or immediately apparent at first glance, it actually serves as a strong indication of internal market activity brewing and a potentially major move approaching. By its nature, ATR is calculated based on the true range of price movements over daily or selected timeframes. If the market is experiencing significant fluctuations, ATR values will rise. Conversely, when the market calms down and trades within a tight range, ATR levels decline. The current ATR curve, which has been trending low for some time, has now started to curve upwards. This tells us that a market that has been sideways or stagnant is now beginning, or preparing, to move. The rise in ATR should not be seen merely as a technical metric. The underlying fundamental dynamics that drive it should also be considered. Typically, major news, macroeconomic data releases, impactful announcements, or movements near key breakout levels are among the leading causes for periods when ATR increases. Additionally, it is often seen as an early signal that large investors, often referred to as smart money, are preparing to take action. One important detail to note here is that ATR does not indicate direction on its own. That is, a rising ATR does not necessarily mean an upward move is coming. Instead, it suggests that price is beginning to move within wider ranges and that the market may present more opportunities. Strong upward rallies as well as sharp downward moves become more likely during such periods. Therefore, for investors, this is a time to be cautious, review stop-loss strategies, and establish sound position management. In technical analysis, multiple indicators are evaluated together, and ATR is one of the complementary components of this system. It becomes especially relevant when assessing price reactions around support and resistance levels. For instance, if the price is approaching a resistance zone and ATR is rising, this may suggest a significant breakout is imminent, possibly followed by a large move. Similarly, if ATR is increasing while the price nears a support level, it may indicate that the support will either hold strongly or break with a major downward move. Furthermore, such increases in ATR following prolonged periods of low volatility often serve as early signs of a structure known in technical analysis as a post-compression breakout. After being compressed within a narrow range, the price tends to determine a direction during these periods and often breaks out sharply, usually accompanied by strong volume. A rising ATR is one of the technical signals that such a breakout may be near. Therefore, it is important to keep monitoring the ATR. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.